We got some big news for ASML stock investors and semiconductor stock investors overall, as ASML's report caused the semiconductor ETF SMH to be down 5%, over 5% on the news. So this latest development had huge implications, and I'm going to go through all the details of what management said and why the semiconductor ETF is down so much, and why the big names, including NVIDIA, AMD, Intel, Applied Materials, etc., are all down big today on the back of this news. So let's take a look at the details and what it could mean for the broader semiconductor market and why AI should be excluded, because AI demand was still strong, and what ASML said about AI should continue to drive enthusiasm for AI. But there are some AI stocks that I'm seeing that are down today on the back of this news as well, when I think that's a misperception of what the company said, of what management said on why their sales are down and why their demand for 2025 is not as strong as they thought it would be. So let's get into the details. There's a lot to cover. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So like I said in the introduction, the broader semiconductor ETF is down over 5% on the back of this news today. ASML said a lot that had broad implications, so I'm going to take you through everything that I felt was critical for artificial intelligence stock investors, ASML stock investors, and semiconductor stock investors overall. Starting with the fourth quarter, which is their next quarter and fiscal year 2024. For Q4, ASML expects a significant step up in sales. They expect sales to be at $9 billion at the midpoint, with gross profit margins somewhere around 50%. They're also looking at the dilutive impact of recognizing two high-NA systems, which is their latest generation technology that they are sending out to customers. And these are lower profit margins initially because they're not produced at larger scale. They have two high-NA systems that they expect to recognize revenue in Q4, and that's going to bring down profit margins in Q4 because of that. But when they get this technology ramped up, producing higher units, selling higher units, that will likely have the positive impact on gross profit margin at scale. And going a little bit deeper into their latest generation technology, they have the low NA and high NA technology that they're developing. And their low NA, they see more and more customers shifting their demand towards their new NXE 3800E, which is no surprise because it shows a 37% improvement in terms of throughput over their previous generation technology. So companies can produce 37% more with this latest generation technology compared to the previous generation technology. And that's great news for ASML because that's going to drive demand for this technology. It's also great news for the semiconductor industry overall, as they will be able to increase supply and thereby increase revenue as a result of an increase in supply. Although the average selling price may or may not increase as a result of this. It might decrease actually, because when you increase supply, even if it's a newer technology, it sometimes has the impact of lowering price, which might be great news for the industry overall. Because if you have an industry that's producing more of this latest generation technology at a lower average selling price, that's going to drive demand for broader and broader use cases, which is going to drive up industry-wide demand. They go on to say their high NA system, which they just started delivering, they're close to having acceptance tests concluded with the customer for those two systems that they shipped. Right? These are very expensive systems, hundreds of millions of dollars. So customers don't just sign and take delivery and accept it and say, thank you very much. No, they bring it on, they test, they do extensive tests to make sure that the equipment is as promised or as ordered. And so that's what's going on right now. The site acceptance test concluded. They're close to having that concluded. And they're in the process of shipping the third tool to a second major customer. So the value proposition for this next generation technology is that it approximately increases transistor density by 3x compared to a low NA system. That means more transistors in a smaller chip and thereby increasing the amount you can have in an existing, let's say, AI optimized data center. If you can put more transistors on each chip, then you can have more chips in the data center and thereby optimizing that power capacity of that data center or optimizing the capability of that data center because you can have more in a smaller space. So they say that they're very much on track, very much delivering the value to their customers that they have anticipated. So that's good to hear, right? Everything is on schedule. Their research and development is working to drive newer technology as expected. And that's great news because the newer technology is going to drive upgrades. It's going to drive demand. And that's great for ASML. It's also great for the industry, which is then going to be great for ASML as the industry grows because ASML is the key provider of this technology. There's literally no one else that could provide some of this technology that ASML drives. All right, moving on to market dynamics. And the market dynamics is the reason why ASML stock is down 17% on the back of this news, on the back of this release. But they say, look, the strong performance of AI clearly continues, and I think it continues with quite some upside ahead. So AI is going really well. It's continuing. Demand is great, and they see more upside ahead. So the AI market is thriving and it's still thriving. So this news from ASML today was in no way, shape, or form a indication that the AI market is coming down. It's not about the AI market. It's other market segments, and the company alludes to this. Other market segments are taking longer to recover. The recovery is there, but it's more gradual than we expected, and they expect that will continue into 2025. So it's everything except AI that's struggling. And that's, electric vehicles, that's personal computers, that's smartphones, that's everything else that requires semiconductors outside of AI. And that's a little bit surprising because the initial market reaction with the news from ASML is that it drove down a lot of the names connected with artificial intelligence when I don't think that should have happened. So they go on to say that there's a slower ramp of new nodes and that leads to some fab pushouts and obviously also leads to a change and a delay into lithography demand timing. So as you've probably heard, if you're a semiconductor stock investor, there's been an increasing number of new fabrication facilities that are planned and are in the phases of new production or expansion, etc., right? You have geographic diversification coming from the companies that are based outside of the United States, getting incentives to build inside of the United States. And these include Intel, Micron, Samsung, and etc. You can go on. And they're building these new fabrication facilities, but they're having trouble with the cash flow to support these build-outs. Their existing businesses are generating cash flow in some cases, like for Micron, they're still generating strong cash flow, but not Intel. Intel is generating somewhere around $1 billion in cash flow from operations, and they're spending somewhere around $13 billion annually on these capital expenditures to build these new fabrication facilities in the United States for the most part. They're delaying these a little bit. They're trying to conserve cash a little bit, so pausing the production of these and waiting for cash inflow to improve before they dish out the money for these new products. And so maybe they were expecting to order these for 2025, but instead they told ASML, let's maybe do it for 2026 or 2027 instead. And then if you look at the memory business, there's also limited capacity additions there. And again, ASML saying anything related to AI is strong, but other than that, there are limited capacity additions. So again, further reiteration that AI remains strong, products related to AI, demand related to AI remains strong, but anything outside of that is where there's weakness. And so for that reason, the company's stock price is down 17%, but the broader semiconductor market is down over 5%. On the back of this news, but I think investors should pay close attention to what ASML said here, is that AI is still strong, But anything outside of that is where there's weakness. So companies that primarily focus on AI, NVIDIA, they will remain strong because demand for those products are still strong. However, everything outside of that, it's understandable to become a little more pessimistic about those categories for the rest of this year and for 2025. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.